Hello and good afternoon. We are here with all the important topics right before the U.S. stock market rings the bell. Boeing Co. has agreed to reacquire Spirit AeroSystems Holdings Inc. for $37.25 per share, valuing the transaction at $4.7 billion or $8.3 billion including Spirit's net debt. This strategic move aims to address manufacturing defects and improve quality control after a critical incident involving a Spirit-assembled fuselage panel. Additionally, Airbus SE will acquire specific parts of Spirit's operations for $1 and receive $559 million in compensation, focusing on A350, A220, and other component manufacturing. The reacquisition reunites Boeing with its former subsidiary, originally spun off in 2005, in an effort to consolidate key operations and enhance manufacturing efficiency. The deal, expected to close by mid-next year, coincides with Boeing's impending settlement with the U.S. Justice Department over the 737 MAX crashes and ongoing financial challenges. Boeing has faced significant cash losses and risks a credit downgrade, making this consolidation critical. The integration will also see Spirit CEO Pat Shanahan, a potential successor to Boeing's current CEO Dave Calhoun, potentially taking over leadership, aiming to stabilize Boeing's production and financial performance. The European Union is preparing to charge Meta, the parent company of Facebook, with violating its Digital Markets Act, DMA, due to Meta's pay or consent model for Facebook and Instagram. Introduced in November, this model requires users to either consent to data tracking for a free service or pay to avoid data sharing. EU regulators argue that this approach offers a false choice, coercing users into consenting to data tracking. This charge follows the EU's recent actions against Apple under the same law, highlighting the EU's stringent approach to regulating major tech firms and ensuring fair competition. Meta's case will test the enforcement of the DMA, which aims to curb the dominance of large tech companies and protect user privacy. Potential penalties for violating the DMA could include hefty fines, underscoring the EU's commitment to reining in big tech and establishing a level playing field for smaller competitors. Google has taken an equity stake in Taiwan's New Green Power, NGP, and plans to purchase up to 300 megawatts of renewable energy to reduce its carbon emissions and those of its suppliers. This investment aims to support the development of a large-scale solar pipeline in Taiwan, where Google's data centers and offices significantly contribute to energy demand. Despite Taiwan's heavy reliance on fossil fuels, this initiative aligns with Google's goal of operating on carbon-free energy globally. New Green Power, owned by a fund managed by BlackRock's climate infrastructure business, is a leading solar developer in Taiwan. The investment will drive equity and debt financing for NGP's 1 gigawatt solar project pipeline, contributing to Taiwan's solar capacity targets of 20 GW by 2025 and 80 GW by 2050. This collaboration will also enable Google to offer renewable energy options to its suppliers, helping lower its Scope 3 emissions and enhancing sustainability across its value chain. This is all we have for you this week. We are MEXEM TV, and we will be here next week, same place, same time. Goodbye.